to the Russell Journal. My name is Russell, and this is my journal entry for today, Monday, October 14th, 2022. As you can see behind me, I got it behind us a daily chart of SPY, and we're going to dispense with all the pleasantries, and we're just going to focus on the technicals for today, because it's really the order of business here today is really only the technicals. Any of the argument you're going to get in the bull thesis camp right now is pretty much, it's just conjecture, right? The idea that a Fed pivot is going to somehow be good for stocks. Long term, it's not good for stocks. Nothing is good for stocks. First of all, companies do worse against a strong dollar, which is really bad. Which right now the dollar is sitting around 112. It's still holding up there. It could be basing up. This could be its new support level. So they do. So we have a strong dollar. At the same time, you have high inflation. This is not really good for. This is typically not very good for stocks in general. And what you have with that is you're caught in a catch-22 where basically you can't. Okay. If you're in earnings season this week, right? You've got earnings coming in, and you've got the big tech guys reporting earnings. If these guys report really good earnings and really good guidance, meaning they're planning on continuing with good future earnings, okay? I'll step over here just a little bit. They're continuing on with planning with good future earnings. You have a problem here that means inflation isn't going to come down, okay? In order to see inflation come down, we need to see people stop buying, so that all of a sudden sellers start chasing buyers, right? As of right now, inflation really happens when buyers are chasing sellers, okay? Or when sellers are chasing buyers, right? So they keep driving it higher. Now, part of the reason we see the spike of inflation again is because the Fed is raising those interest rates, and higher interest rates make things more expensive, right? Now, one of the areas you can see an example of what the Fed is trying to do is the housing market, right? You can see the housing prices are coming down across the country. I know where I live in Seattle, we've seen at least a 10% decrease in housing values. As relative to the interest rates. So, with all that being said, that's the plan, right? Is we make the cost of money more expensive, so the cost of houses come down. It's the same way with any goods or services that you could possibly want. Okay. There is one piece of news. We got to keep an eye on natural gas. Natural gas. Right now, the 2023 contracts are starting to move into negative value territory, meaning they are paying people to store that natural gas in the future. So we need to watch that. We could have sort of an inverse, or the same thing that happened when oil went negative. You've got a big, massive buildup of natural gas in Texas right now, partly due to they had an explosion earlier this year in one of their ports that stopped them from getting natural gas out to export. So there's quite a bit in Texas right now. It's not a global thing. It's just mostly kind of localized, but it could spread. Now, that is some good news in the inflation front, because if we do find a way to export that oil or that natural gas, it will make heating very much cheaper for Europe, which is very much struggling right now. Okay, so again, aside from really anything fundamentally, anything you're going to hear, what you're getting right now is a technical move. Okay, you have a whole bunch of guys who came into this market. You can see they shorted all the way down to here, and then what you had happen here is, again, really nice target. If you're a bear shorting this is a nice target to hit down here. This is down around the 200, all the way down to the 200 EMA. Okay. And without an immediate capitulation type move, the order of business was to take profit, okay? If you are somebody who's in the market, if you're a trader, you're not really bullish or bearish, right? You're looking for opportunity. And the opportunity said here, if the shorts start moving to cover, time to hammer the shorts, okay? So from here, we really get the move higher, right, into a pullback. And when this happened, right, I don't know whether it happened on purpose or not. Usually there's not a lot of coincidences in the market. This second day put in a higher low, okay? You brought up a higher high, a higher low, and now you're free to basically run the chart, okay? And the question is, where are you running to? Can you pull up, you see if my producer can help me pull up the actual Webull chart. Let me see. Hold on, leave it right there really quick. Okay, so you can see what happened. What I told you happened yesterday was we would go up, we would hit this Bollinger Band, and then we would pull back, basically. And that you were going to probably get some type of similar Doge candle in here, or small body candle. And that's because, look, these guys bought down here. They ran it all the way up here. It's time to start taking profits. And there's two things you can look at. Is one, on the daily chart, you're at a massive price target. You're at a place where you get above that, and now the market maker is not working for you. He's working against you, right? You can see on the daily our momentum is up. It's overbought, but it is not an embedded, as Ira Epstein says, it is not an embedded reading, okay? You're just overbought at the moment. Now, if it gets up here and stays up here for 3 days, we have an embedded reading and you have a different story. But as of right now, you're just overbought. You don't have the continuing momentum. So what I'm going to say is probably going to happen tomorrow is you should have some type of pullback scenario happen here, okay? Now, if it's really, really bullish, the pullback scenario will be small. It may even be some type of inside candle here, as far as that goes. But it is going to be really, really. It should be a small move down. Okay, so that's really what we're looking for going into tomorrow. Again, you have a lot of this here. You have the bull trend, and you have momentum is up, but it's a bull. It's overbought. So. Right now, if you are a bull, you're not looking for reasons to be long anymore. You're looking for ways to come out of this market. You're looking for ways to take profit, take some off the table, de-risk, cut half your position, whatever it is. And possibly waiting for somewhere back under these lows back over here to stop out or to get momentum stacked going, continuing to the upside. Now, I need to go to the weekly chart. We're going to go over the weekly. Now, one of the things you can notice right here, though, that is very, very interesting, on the weekly chart, you have this down bear trend here, but what you have here is the slow stochastic is giving up its oversold reading. Okay, and again, as the guy Ira Epstein, who I follow, teaches, that's gonna usually merit a move back up to the 18-day moving average, which is basically that dotted line right up there. That's the 18-day moving average. So I'm trying to get out of the way of the chart a little bit here for you guys so that you can see what's going on. So we could see this price target of 187 come in and get hit. That is very well possible, or 387, I apologize, come in and get hit. That is really, really possible. But we do have a lot of stuff to go through as far as the whole thing goes. Okay. So that's really our technical analysis for the week. Now, what you have, though, is a potentially very turbulent week ahead of you because you have earnings coming in, okay? So what I'm putting on, the structure that I'm going to build as far as like my option strategy goes, I'm calling it the infinite trade. I don't know if there's another one out there. I've seen the wheel setup. That is an options trade. But really, our trend is to the upside, and my infinite trade setup here that I'm working on, and it's still developing. So if you believe this, as I explained it to you, if it makes sense to you, let me know in the comment section below, and tell me you think it makes sense, or if it doesn't make sense to you, please by all means tell me where you think it could be better. Again, I don't believe in trading in some type of vacuum. Okay. So what you can see here is that we're in an uptrend, and yet in an uptrend over here, I'm holding a put position. Okay, I'm short at 377 on the market. Okay, now again, all this position is for me is it's an insurance policy. In the event something happens, there it is. Today I put on once I put on my call position, I put on my long position, which I did pretty well on. Actually, I made enough to pay for this put position. Once I made that money, I put on the put position, and I'm free to trade long against it, or I'm free to stack short with it. Okay, depending on which happens. Okay, so coming into tomorrow, again, expecting a pullback, something like this put here may actually start to print tomorrow. In the event that it doesn't print, I'm free, no matter what happens this week, as long as we continue in the uptrend, I am free to continue to trade long against this position, okay? So no matter what happens, especially because today this put has been paid for, I'm free now. Any money I make on my calls basically becomes free profit. It becomes money to me, right? I can actually see account grow. If I actually took you over inside of the account, let me know if you'd ever want to see inside of there. I will post some things about what's going on inside of that account. I won't show everything because some of that I don't want to be stolen. But the whole thing is from this put position, I can now balance against it, right? And I can do it free of charge. I don't have to worry, right? If I want to buy multiple calls against it, I can. If I want to, and so this thing creates basically an infinite loop where I always have some sort of trade on. Now, the one thing about it that is really important. So the way the bigger guys, like if you go over to like Tasty Trade and watch them do like the typical strangle or the typical straddle or any of those things, right? What you'll see with those guys is they will go and they'll be buying contracts 6 months out, right? They'll be a half a year away. Okay, the problem with this for guys like me is my account balance is right around $1,000. I don't have the money to trade those large contracts that far away. Okay, one of those contracts alone can cost between $2,000 and $5,000, right? So they can play both sides of it that way, but it doesn't really work for me. So I have to move closer to move to closer expirations. The problem with the closer to expiration you are is the more you're affected by what's called theta. And if you've been on the channel very much long time, if you've watched my videos on theta burn, essentially this option is the opportunity or the right to buy or sell shares at a predisposed price. Okay, that is what that is. It is got a date that it expires. The closer to the expiration date, the less money that is worth. Okay. Now the way they calculate how much your contract reduces in value over the up until expiration is they calculate what's called theta or your time decay. Okay. And the thing is so I will wake up tomorrow and this will be about $30 less than it is now, just because it's close to it expires on Wednesday. Now I don't know whether to do 2 days out or 5 days out. I can afford some other things, so right now I'm just playing with this one, and seeing how it's paid for, I have no problem just kind of holding it to see how it goes. But at this point, that's kind of where I am with the contract that I'm holding. And tomorrow I will look for long entries against it. And maybe those long entries can last for a few days as opposed to this. Because, again, I'm free here. If we collapse, this thing's going to print. And, if it turns bearish on me, something happens, I'm safe, right? So as long as that's paid for, I am free to just continue to trade. Now, what may actually happen with this is I may exit this position and move the position up. Right? In the wheel strategy, it's called rolling your position. So I may have to say we break above 380, right? And we hold above there. I might move the call to my next position to 380. Now, in the event that momentum does come into this, because I am looking at that weekly time frame, there is a part of me that, if it looks like we're going to 387, I'll probably just cut this and just hold calls all the way to 387. So That's kind of where I'm sort of looking at as far as things go. But still, anything can happen, and I'm not sure what's going to happen with earnings. This is a market too where good news is bad news and bad news is bad news. So again, if we have the tech guys come in tomorrow, they give good earnings, they give good everything's good on those guys, and yet they listen. Good earnings and good guidance means the Fed is going to continue to raise interest rates. That's it. That is it. If your companies are still making money and they're not telling you how they're cutting costs to save the customer money, then I'm sorry, the interest rates are going to keep going on. Okay, so the thing with that is long term looking out there. You're looking at more interest rate hikes to come, even though they're kind of hoping for a slowdown or at least a pause or a pivot of some sort. But again, that guidance is not, if it's good, it's not really pointing towards lower interest rates, okay, at the moment. So anyway, that is going to do it for me for today. I'd like to thank you guys for joining me. Please remember to subscribe to the channel, hit the like button on this video. Do leave a comment. I'd love to hear what you think about my infinite trade strategy here. And until tomorrow, the Russell Journal is written, edited, and hosted by me, Russel Liss. We are produced by Social Media Shows. Our executive producer is Maria Pureza. Check out socialmediashows.com for if you want to start a YouTube channel or do something like what I'm doing. And until tomorrow, go ahead and pretend I said some sort of catchphrase.